there. Thank you, everybody. Great to be here. My name is Kellner. I serve as a director at SeedInvest, one of the leading equity crowdfunding platforms in the US. I have been part of SeedInvest for a bit over 8 years now. I actually celebrated my 8-year anniversary a couple weeks ago. And I thought that this would be a really interesting opportunity and time, given everything that we're seeing in terms of the momentum behind equity crowdfunding in the US today, to use this as an opportunity to, one, introduce people to SeedInvest for those who may not be aware of us, but also take the time to reflect, given how long we have been a part of this space, on a number of the lessons learned over the last near decade, in addition to some of the biases that existed in the traditional venture capital space when equity crowdfunding, was first getting going, that we have to date proven to be untrue, and I think are just kind of interesting things to point to and speak to a bit, whether you are on the investor or entrepreneur side of the table. So first, a little bit about SeedInvest. So we are, like I said, one of the leading equity crowdfunding platforms in the US. To date, we and our network of investors have funded through our platform over $350 million into a portfolio of about 250 companies. We pride ourselves on the quality of the offerings that we present to our investor network. Quality over quantity has really been one of the core linchpins of our brand and our approach since we opened our doors, like I said, about 7-8 years ago. Frankly, it has just never been our goal to have as many offerings concurrently raising on our platform as possible, but instead to curate what we believe to be a more attractive set of investment opportunities for our investor network. So on the one hand, what that means is that we are not going to boast, if you will, the as high of a successful offering figure as we know some of the other platforms in our space can, nor the size of our community, et cetera. But on the other hand, what this approach has enabled us to do is, one, raise far more on average for the companies that we do choose to partner with. Last year, the average successful offering on our platform was in excess of $3.25 million raised through SeedInvest, which is multiple times higher than what we're seeing from others. But also, very importantly, be able to provide dedicated white glove and hands-on support for every company that we partner with. From the moment that we engage for diligence through onboarding, we work hand in hand with the companies that we choose to partner with to help manage and oversee the fundraising campaigns themselves. And that hands-on dedicated support extends basically into perpetuity with shareholder management, et cetera. We do see ourselves and believe ourselves to be the most highly vetted platform in our space. To date, we have had over 55,000 companies seek to raise on our platform and gain exposure to our network, of which to date we have accepted a little bit less than 2%. We are an agnostic platform from especially an industry perspective and geographically as well, which I'll speak to shortly. With a size of portfolio as large as we have, it has become increasingly difficult for me to think about a specific sector or industry that we don't have at least one portfolio company representing. And while the SeedInvest name would rightfully imply that we do tend to and have historically focused on earlier stages of capital formation, one of the things that's actually been extremely rewarding for me, having been doing this as long as I have, and supporting companies in this way as long as we have, is our increasingly proven ability to support companies over multiple funding rounds and longer stretches of their life cycle. And so as we have grown and matured, our community has grown, and the companies in our portfolio have grown and matured, we've been able to move into slightly later stage, true Series A, Series B, and in some certain circumstances, even early Series C rounds. Like I mentioned, we're also geographically agnostic. Pre-pandemic, I would say that we were based in New York, And while most of us are still in that geographic area, we're definitely a bunch more spread out today than we were a couple of years ago. We've always worked and been open to working with companies no matter where in the country they are located. But as time has gone on, we've become increasingly open to working with companies located across the world as well, and do have portfolio company representation across Europe, Asia, and the Middle East, Israel specifically for now. With the appropriate footnote that depending on where a company is, local rules, regulations, as those as here in the U.S., may prevent us from being able to, work in a true crowdfunding capacity, but at least making investments available to accredited investors is something that is pretty tried and true for us at this point. Going alongside or in hand with the highly vetted approach that we've taken since our inception, is this notion that we do not see ourselves, or even equity crowdfunding in general, as inherently competitive or antithetical to traditional venture capital firms or just traditional players in the venture capital ecosystem. It has been, kind of our position and the way that we've operated since inception, that we are merely another participant, and equity crowdfunding is merely another participant in this venture capital ecosystem that is able to confer certain advantages to the companies that choose to leverage it that may not be available elsewhere. And so we have consciously kind of worked and developed processes, our docs, just everything, in a way to be very symbiotic, if you will, with the traditional players in our space. And while it is not anything new for us today, we work and invest alongside VCs, after VCs, increasingly before VCs. Again, it's not competitive one way or the other. We're all in this together to hopefully find support and invest in what we believe to be interesting investment opportunities and good entrepreneurs that are worthy of funding. One of the other ways that we kind of differentiate ourselves a little bit or operate a little bit differently than a number of the other players in our space is the fact that we operate wholly through a regulated broker-dealer. We have been doing this longer than anybody else in our space, having formed our own back in 2014 and facilitating all of our operations through it. And while operating through a BD definitely comes with a lot of headaches for us that we have to deal with as a highly regulated entity, at the end of the day, it's also that decision that enables us to partner with companies in a variety of ways and really craft our engagement and the work that we're doing with these companies to align with the goals of the companies that we're partnering with. And really, that's honestly one of the first questions our team will have when speaking with new companies that we are potentially interested in working with and are potentially interested in working with us. It's, what are your goals? What are you looking to accomplish? And then let's see how we can potentially work together to enable us to help you accomplish those goals. So NowRx, as an example, is, I would say a prototypical example of a traditional equity crowdfunding company with a founder who just believes in democratizing access to his company, sees the value in a larger investor base, and sees value in not taking money from VCs that might have, kind of competing interests or timelines with him as, the founder of the company. NowRx is a company that we have now worked with about 3 times over the last 4 years. In total, we've raised about a little bit less than $30 million for NowRx, including an oversubscribed $20 million Series B that we raised for them last year at the peak of the pandemic. TrustStamp is a company that approached us with eyes set on a public listing. They already had a strategic investor, momentum in a round, but didn't have the shareholder base that they needed in order to meet certain public listing requirements. And while we have developed and do utilize a solution to enable companies to raise from both accredited and retail investors, from potentially thousands of investors, without actually meaningfully impacting their cap table, in the case of Trust Stamp, we said, all right, cool, we're going to throw that out the window so we can get as many investors on your cap table as possible, so that you can meet those listing requirements, which they did. And they did end up subsequently listing publicly, I think about 3 or 4 months after completing their raise on SeedInvest. The last one to note here, Metadata, is just your traditional, kind of high growth Silicon Valley, like venture backed software company. Another, again, a company we've worked with now across, I believe, 3 funding rounds, each one of which being a round that was led and majority participated by existing institutional venture capital firms that were taking down the majority of the round. And basically, the company came to us to essentially just help us syndicate the remainder of the round. So, hey, we've just closed on $3 million out of a $4 million round. I want to go back to just focusing on building my business and not have to worry about this other $1 million. SeedInvest, you just take this. We were able to open up to accredited investors in our network, and again, on repeated occasions, be able to fill those rounds. So again, whether it's Reg A, Reg CF, Reg D, we are able to support all of the offering exemptions available to companies in the US and really kind of craft that decision and strategy based on what it is that a company is looking to accomplish, and how it is that we can help them get to that point. So, again, we have been doing what we have been doing for the better part of a decade. And like Judd at EquityNet and others in our place have been one of the players that has been really instrumental in helping to move our industry forward. We were, one of the first in getting the Jobs Act legislation actually signed into law, and a number of innovations in our space that, frankly, we take for granted are things that we, are brought to the table. So when Title II of the Jobs Act went into effect in September of 2013, SeedInvest had the first free accredited SEC Safe Harbor compliant accreditation verification built directly into our system. The concept of a side-by-side offering, where a company conducts a simultaneous Reg CF offering alongside a 506C Reg D private placement, is something that we were the first to originate. The first indication of interest in a Reg A Plus testing the water campaign took place through the SeedInvest platform. We were the first to facilitate transatlantic equity crowdfunding campaigns through a partnership we had with leading UK platform Crowdcube, and actually just announced last month, since it is still technically August, is that we are also home to the first unicorn exit in equity crowdfunding history for a company that conducted a raise open to retail investors, that being a portfolio company of ours called Heliogen, which conducted a Reg CF offering through SeedInvest a few years ago, and announced a $2 billion SPAC listing expected to be completed by the end of the year. So again, just given our involvement in the space, and really being on the front lines of it, there have been, again, a lot of lessons that we've learned. And, speaking personally, the biases that existed in the space 5-10 years ago that we have been able to prove are essentially untrue. So first, and among the more important, is this kind of showing that equity crowdfunding can be a legitimate business catalyst. This is not necessarily surprising based on the experience of, donation-based platforms like Kickstarter or Indiegogo, which frankly inspired the Jobs Act. Those platforms helped kind of invert and compress an entrepreneur's ability to ideate, validate demand for, and raise initial capital for their company all in one go. And similarly, we've shown that equity crowdfunding can similarly provide a mechanism for companies to not only capitalize their businesses and fundraise, but to also affect other business development related initiatives at the same time. It is basically par for the course at this point that when a company that we work with launches a Reg A or Reg CF, they come back to us and let us know about definable and measurable lifts that they are seeing in engagement, in signups, in sales, in pre-orders, in downloads, whatever is applicable for for the company. So it's no longer this notion of, hey, let me go raise a bunch of capital and then go and try to find a way to find new customers or retain and engage with the ones I already have. Equity crowdfunding has proven as a means for companies to do both at the same time. Second, and like I referred to a few moments ago, is that equity crowdfunding and traditional venture capital aren't mutually exclusive, or they don't have to be. A good, again, recent example from another portfolio company of ours, announced, I believe, last week, is a company that we raised for a number of years ago called Shelf. That just announced about a week ago that Insight Ventures and Tiger Global were jointly leading a $50 million plus Series B for the company. Again, very traditional players, very notable players in the traditional venture capital space that essentially followed on to a equity crowd-funded company that had done a raise a number of years ago. And again, one of those concerns that we definitely heard many years ago, a little bit less today, but it still crops up, is, well, if I raise through an online platform, is that going to hinder in some way my ability to raise capital in the future? And again, at least with the companies that we have worked with and our experience, the answer is a resounding no. The third, and I kind of alluded to this a little bit earlier as well, is this notion that you can raise meaningful amounts of venture capital through equity crowdfunding. Again, as someone who was at the front lines of this, back when nobody even knew what accreditation verification meant, because it just didn't exist up until that point, through the opening up of this asset class to both accredited as well as retail investors. Back 5 years ago, maybe even a little bit less than that, you raised $500,000, maybe $1 million through an online investment platform. Everybody was feeling pretty good about that. Anything more than that, you were kind of punching above your weight class a little bit. Like I mentioned, we've now gone to a point where last year, the average raise on our platform was in excess of $3.25 million. And over the last, call it 12 to 18 months, we have had numerous examples of companies raising 5, 10, 15 million plus dollars online through our platform, including, like I mentioned, NowRx, which completed an oversubscribed $20 million round. And actually, we are in the midst of launching a $50 million Series C for them right now. That is already off to a very nice start. The fourth is related to the third for sure, but does have a slightly different flavor to it, which is this notion that equity crowdfunding can support multiple follow-on rounds. And what this kind of gets to is one of the, kind of noted, understandable, and true value props of a traditional venture capital firm, and why you want a traditional VC on your cap table, is this notion that they can write multiple checks. What we have found is that the same is true from a democratized and engaged investor base. Virtuix, a company that we oversubscribed a $15 million raise for earlier this year, actually increased their target raise from $10 million based on the response from their existing investors, and still oversubscribed. And the last, I know it sounds like I'm running out of time here, is that equity crowdfunding doesn't have to hamstring you operationally if it's done correctly. You also don't have to strip things like voting rights and investor protections from investors coming in order to be able to be nimble and effective. We have put a lot of thought and intention into ensuring that the investors that participate through SeedInvest are investing in VC quality deals at VC quality terms, but doing it in a way that enables companies to remain flexible and nimble. Heliogen, which again is going to be going public later this year, was able to secure from us within 36 hours, the majority consent they needed from the 1,000 investors that participated in their round through SeedInvest. And anybody like me who has been in the position of needing to herd cats, even if you're talking about a handful of investors, getting that type of consent in that period is pretty crazy. So again, I know I'm kind of rushing here at the end to keep us on schedule here, but do hope that this was at least somewhat enlightening or illuminating. I know my contact information was flashed up there. If you have any interest in engaging with us, start getting a conversation going, whether on the investor or the entrepreneur side of the table, feel free to go over to seedinvest.com right now. We have a live customer support team that you can reach out to and would be happy to direct you to the relevant individual or teams on our side.